Welcome to the Jim of All Trades channel, guys. Glad you made it by. We are going to be looking at, I'm watching EU right now. But we're going to be looking at Bitcoin here very quickly. But this is a trading live stream, so what that means is that we are, what did I say? Trading live school, trading night school. And this is a teaching session. I'm teaching how to trade. So, but I promise to do a little analysis here on Bitcoin and Ethereum, and then we get right into it. Okay. So hit the likes, guys. Appreciate it. And hey, yeah, come back and leave a comment later on the video when you can, if you think about it. The comments really help the channel. The more comments, the more YouTube recommends the video. So, all right, thank you so much again. Appreciate it, all your faithful watching, and I hope you guys are growing as traders. I hope you are learning how to trade and becoming better. It's going to take a while before you to get good. So don't get frustrated. Just trade small while you're learning. Anyway, let's do the TA. I'm just going to start the TA. Anybody that comes in can what's the word? Anybody that comes in can rewind, and I'm just going to go ahead and start the TA. All right, but we're going to talk about tonight on Trading Night School the fourth and the fifth wave and the psychology behind it. That's a great topic. Aaron, you talked about psychology, recommended psychology. I'll explain the psychology between the fourth and the fifth wave of an Elliott system. Okay. All right. That being said, let's zoom out and see what we got going on in the 4-hour chart here. All right. Kind of an old target there. All right, look what we're doing. Look where we have bounced. We have bounced right on this trend line support. Okay, that's one thing. That's an important support line all the way back here. Carries here, here, and here. That's a very important line. Very important line. Now we got a secondary trend line that we should watch right here. The top of this wave, the top of this wave, the bottom of this wave. Look at that. Okay, that's going to be another bouncing point potentially, if it comes down. So let's watch that one as well. That's an important line as well. Just talking trend lines right now. You can see that this wave right here and this wave here clearly divergent from each other. Okay, clearly divergent. Then we had this wave right here. I'm on the 4-hour chart. Right here, the RSI came and made a double top peak, while this made a downward trend motion. That is technically hidden bearish or exaggerated bearish divergence. Okay, it's not steep, but it's there. When you have RSI making a double top, while the price action is going in the downward direction, that is exaggerated bearish divergence there. So you can see how we've been looking at that and just calling down as the basic direction. All right, now are we going to get any more than that? Well, let's take a peek. Now the RSI is relatively, it's just touching the oversold. There's plenty of room to come down here on the 4-hour chart. Thanks, Josh, man. I appreciate that comment. Thank you so much. And Mark, thank you as well. Okay, sorry, I've got the computer over here looking at the chat, and oh, excellent. Okay, so let me pull up my Forex account here. There we go. All right. So that being said, nothing in the divergence, no divergence well, there is actually. There's hidden bullish divergence, or it's exaggerated bullish divergence for now on the 4-hour chart, where you have the RSI coming down, even making a double bottom now. Okay, let me zoom this a bit bigger so you can see it. So we're making a double bottom here on the RSI, roughly, while price action is making a move to the upside. That's bullish for now. Now, what I understand and what you guys need to understand is that um, any divergence um, is wipeable. Okay, it can be wiped out very easily. Okay, um, so understand that. I need to do a little bit of looking at this. I'm in this trade right here, and I just need to pay attention to this just for a second. If you can just give me one moment, guys. Okay. 1, 2, 3. This may stop right here and want to reverse. We'll have to see. I'd like to see it continue, but it may want to stop. I was hoping it would just be 1, 2, 3, 4, and then 5. So we'll see if that's something simple that we get. All right, sorry, I just gotta kind of keep an eye on that guy. Okay, yeah, you're fine. Grace is about to make popcorn, guys. So be aware. Be aware. Okay. So anyway, back to Bitcoin. Sorry about that. I'm so busy right now with my own trading and um, stuff going on. All right. So anyway, divergence bullish right now, but that divergence can be wiped out. A move down here and a strong move of price can wipe that out. No problem at all. Very easy. So understand that divergence is helpful, especially the higher time frame divergences are more they're long. They'll help you with the longer swings, right? But that being said, the they can be wiped out. It can always be wiped out. All right. So there's the divergence there. We've taken a peek at that. Now what's going on here? Let's look at the counts. So you guys really, really, really need to have an understanding of what the potential counts are here. So my potential counts right now are this. Let me give you the bullish count first. Okay, bullish count here is 1, 2, 3, 4. Now 4 is in question, and then 5 coming up. Now, if this is the count, this could be a 1-2 wave. What we just got is a 1-2, and then we're heading up for an extended fifth wave, an extended fifth. It's potential 1, 2, 3, 4, 5, or maybe even a ending diagonal. That's a possibility as well. So um, yeah. So anyway, so that's a possibility. That's the bull count, okay, guys. And so what? In order to support that count, there's 3 things that has to happen that I don't like, okay. But I'm going to share it. So in order for that bull count to be correct, I've got to show you. I'm going to show you 3 things that have to be true. Number one, this I got to close down Telegram. Number one, this has to be 3 waves. Okay, that can't be an impulse. That has to be 3 waves. Number two, this has to be 5 waves right there. Okay, now or No, I'm sorry. This has to be 5 waves, which I don't like that either. So I don't like that as a 3 wave. I don't like this as a 5 wave, but it has to be. Okay. Um, then this has to be 3 waves, which is fine. And then now we go up. Okay, and now we head up. Now I don't think that's going to happen, but that's the bull case. That's the bull scenario. Now, another possibility. Um, let's see, bull possibility. This is a the other bull count is that this is actually a 5 wave. This is indeed a 3 wave. Now we need a 5 wave. So this is just in the middle of the third wave. 1, 2. We're in the middle of the third wave. It's coming down here 4, 5 like this, and that's going to be a 5, 3, 5 fourth wave. Okay. Um, and that needs to come down here to 8,000 to 7,500. Between 8,000 and 7,500. Those are the two options there. And that would be a 5 through 5. And that's still bullish as well. It just extends the fourth wave a little longer, and we go up big time after that. And that gives us our 5 waves. 1, 2, 3, 4, 5. Those are the two bull counts that I see on the table. Now let's talk about bearish. What if it's bear? Okay. By the way, this came right down to the 127 extension, and that's what we're bouncing. We're bouncing on the trend line support, and we're bouncing on the 127 extension. Those are places where traders are going to trade on the trend line, and they're going to trade at the 127. See that? Boom, right there. So understand that. Jason, thank you, buddy. Hey, good evening, PEP. Yuleman, yeah, I think there's bearish divergence. Um, you're welcome for the YouTube content, PP. I'm glad you're learning a lot. And Tara, I'm glad you're learning a lot too. I see you've settled down a little bit now. It's good to go. So thanks, Christopher, as well. Appreciate that. Um, so um, anyway, we're bouncing on the 127, but this wave just doesn't look finished to me. But I went ahead and traded it to the upside anyway. Um, just for just in case it wanted to take off, and that this bull count was indeed the count. It would be a WXY here, 3 wave move here, and then a 3 wave move there. That would be WXY. But it just doesn't look finished to me. 1, 2, 3, 4, maybe one more hit to the low, and then that might be finished. But I think if it does that, if it breaks that trend line, guys, then chances are it's just gonna rip. It's just gonna rip down. Okay, so that's the way I'm seeing that one, guys. Now, we may go ahead and get a larger correction here. Okay, we might get a larger correction that takes us back up here to the $9,400 regions right here around support, and then or resistance, I should say, and then we get another. So that may take another day or two for that to happen. So we might pump over the weekend. Might pump over the weekend and then come back down Monday or something to finish this. So we'll have to wait and see how that plays out. So, not certain on that, but anyway, my gut's telling me down more, down more. That this is indeed a 5 wave move. That we need to at least come down to $8,000. Right here is my target line, $8,000, or even the 7,500. Now, if we get down there, guys, is even a likelihood that we go even further because. Let's talk about that. If we get down to $8,000, guys, it's likelihood we're going down to 3,000. Okay, let me explain. Um, in the grand scheme of the count here, again, this is counting this as a 3 wave. That would be a 3 wave bull move, and then we're going to get a 3 wave move here. So the first 3 wave gets us down here to the 8,000 or 7,500. We get a reaction off of that, 3 waves up, and then we come down to finish that third wave. Brings us back down to a double bottom or lower, but I don't want it to break 3,100. That's my wish and desire for Bitcoin, not to break 3,100. Okay. All right. So yeah, that's the way I'm looking at Bitcoin right now. Let's look at the micro count on Bitcoin, then we'll look at Ethereum and see what's going on. Micro count here. We have a thing that we do in our trading group. We wait for the H, okay, for our trade. Actually, we actually went long. I went long. Where did I go long? I went long right here on this down move, and then it came back up. And once it got up to um, 90, 80, I took profit on this first pullback right there because I didn't like my position. I knew price was going to come down. I didn't know how much. A lot of times it likes to come down and retest the low here, and I didn't want to go into a negative trade with the possibility of this continuing down. So because of that, I went ahead and took my profit and wanted to reposition myself. Well, we've been waiting for this to come back down. So we're kind of getting it here. So I don't know if this is a 3 or a 5 wave move there, but this could be finished. This could be impulse off of that, and then we're getting a 3 wave move retest. There's our entry point, and then we go up for that third wave, getting us up here in this region somewhere right there. And that gives us a 1, 2, 3 wave, and then we have continuation down to the downside. That's possible. Worth trading? Yeah, because if that bull count is correct and we start mooning from here, you'd like to be on that train, wouldn't you? So anyway, that's a possibility. So let's watch that guy. This could be a 3 wave move that comes down here. So I'm not sure about that either. So let's just watch that. Okay, so yeah, I'm thinking more down, but we could have a complex correction up over the weekend first. So something like that, and then down. Okay, so I don't know. I don't know how that's going to play. Um, okay, let's look at Ethereum. Let me check out your USD. There we go. Looks like it's still doing okay. It's not reversing on me, so that's good. Okay, duplicate that chart. How many viewers do we have right now? For some reason, my YouTube studio here is not keeping up to date with how many current video watchers we have. Yep, 44 of you. Okay, cool. Cool. Welcome, everybody. We are doing some TA before Trading Night School. We're going to do a Trading Night School here. Just a second, I'm going to show you the psychology between the fourth and the fifth wave and what goes on there with the market makers and what they're doing. Okay. All right. So we're going to lean on our Bitcoin TA a little bit to, see what's going on here. Okay. So we have you can see these intermediate trend lines that I've put down, and whenever they break, it's significant to me. But let's draw the main trend line right here. You can see this is playing around in it. If I exclude the wick here and take into account there, that's the best line right there. And what we've done is we've broken it and retested it, and then we've broken back down. So it's looking highly likely that this may have continuation to the downside. Highly likely. Um, the way it looks here. Let's look at divergence here. Don't I see some fairly decent divergence. We do have a little bit of a down move here, but we have a steeper down move here. So they're not acting perfectly together. Let's see here. We do have hidden. This right here on the 4-hour is what we call hidden bearish divergence. Right here, where from this peak here to this peak here, we're going sideways or down, whereas the RSI was resetting. Okay, so that's hidden bearish divergence in the 4-hour chart. All right, so there's that. What else can we see here? Let's go to that's the 8-hour chart. Sorry, let's check the 4 hours, see what we got here. Same thing. Same thing. We've got hidden bearish divergence right there on the 4-hour. Same peaks. So bearish is the direction on the larger time frame, but we have come down, and chances are that we're going to have some continuation, and we're probably going to get more oversold here, create some divergence, and then head back up. So That's probably the way that's going to roll and work its way down. So let's look at the wave count and see what we got here. This is a one. That's really hard. It looks like a three wave, and a five, but that five seems out of place to me. So guys, this is a really odd wave shape for me. All right, what's going on here? Did that break the high? It did. It did break it. This move right here is just baloney, is what that is. I'm having a hard time interpreting this right here because that looks like a three wave right there. This looks like a five wave. But that can't be a 335 because this didn't come back to 90%. Um, sorry, keeping up with a lot of things here. So that's odd to me. The only other way that could be is this could be one. Let's go to a smaller time frame, see if we can see. Nope. See, I don't see anything in there. The only way to count that as a five wave move is that you got the 1 2 up in here somewhere, 3 4 with an extended fifth. And that's a 1 2. But this can't be a 1 2 because this broke this high. So yeah, this is a bunch of very difficult stuff here. Um, so the best way to interpret it to me is WXY W WXY, and this is some kind of a three wave. I, it doesn't look like a three wave. So that's troublesome to me. But man, it certainly looks like a three wave move, especially given this wave right here. Ethereum's a tough wave. I see a bit. Well, I don't know if it's a diagonal, but it's a good trend there. Then we broke out. What is this, guys? It's just a manipulation, uh, dragging the market out. Guys, I don't have a clear count here. It looks like a bunch of 1 2 1 2s. That's the way it's looking to me. So down is probably the direction. We'll probably have some continuation. Let's look at the small time frame to see if there's anything there. I mean, this is just ridiculous. Whatever this is. I mean, this could be a triangle in there, but that man, that's just a. What is this? I don't even like it as a triangle. It's just a bunch of nothing, is what it is. That's crazy. See, that could be a three wave move. And this looks triangular, but it's not a triangle, I don't think. Just keeping an eye on Ethereum there. I mean, EU. Guys, I'm having a hard time with Ethereum, guys. I just don't have a whole lot of. See, I mean, the problem is this is three waves. That's three waves. This is five waves, and that would be a 335. The only problem is the only 335 count that's allowed is a flat, um, and a flat must come 90% of the A wave. Um, 216.78. 217. 216.86. It didn't break it, guys. That didn't break it. Okay, so we can have. All right, here's a possibility, guys. This could be a bunch of nested 1-2-1-2s, and we're gonna get such a big move coming up. 1-2-1-2-1-2. This did not break this high, and now we're in the middle of a very, very, very big wave. I just don't. I don't see it though. That's very bearish if that's the case. All right, that's the best I got right now. All right, buddy. Let me check. Let's check out Max's macro bear count. Um, yeah, that's pretty much WXY there. Yeah. I don't like your B wave, man. Uh, I don't believe your C. I don't like it. I don't believe it. Um, market can do whatever it wants to do though, but I don't like this B. That's a that's an impulse to me. That's my struggle with this count. So that would be the weakness of the count. And then, um, whoop, um, you're counting this as a yeah three wave, three wave, three wave, three wave, and three wave. Yeah. I don't know about this expanding diagonal either. Do they even exist? Do they even exist? Yeah, I don't know. I don't know. Yeah, I saw that in the chat, man. And yeah, it's valid. It's things I don't think about. So I mean, I think it's valid. I would just question the impulse wave in the middle. That's my big problem with that. I'm just so convinced that that's an impulse wave, but I've been wrong before, and I'll be wrong again. All right. Um, okay. It's the best analysis I can give you tonight, guys. Sorry, it's not better. The You tell I'm pretty tired tonight. I'm pretty exhausted. I've been out in the sun today, messing with a wall. So, all right. Well, let's jump into the trading night school, shall we? All right. Who's going to hang around for trading night school? And thanks, Edward, for the congrats. Appreciate that, man. Uh, Hamed, the wait, three. The only problem with ABC as the on ETH is the ABC has to be a 535 or a 335, and but the 335 has to come back 90%, so that's not allowed. Like unicorns, yeah, I hear you. Your view of the the first three waves, though, your W wave, is exactly the way I see it as well. So we're spot on there, and I just can't get past the impulse wave there in the middle, that B wave. So yeah. All right. Yeah, we're gonna be consolidating here for a bit, but this is very impulsive. I'm expecting three waves down and then maybe continuation up. That's the way I'm kind of looking at Bitcoin here, something like this. And then we got one, two, three, one, two, three, something like this. Maybe this thing could roll over and come down here and then do it. So Hamed, send me your chart, buddy, in Telegram, and I'll look at it. Okay. All right, guys, let's jump into forex analysis here and forex trading night school, and let's talk about understanding the fourth and the fifth wave of an impulse and what's going on psychologically with you in that fourth and fifth wave. Okay. So let me basically show you that I want to just basically say on the front end that the fourth and the fifth wave is basically designed to trap traders. Okay. Basically designed to trap you, to take your money, and create liquidity. So let's talk about that, and we'll jump into the analysis. Okay, or not the analysis, but the lessons. All right. So and we can really actually we might expand this lesson to just the way the market makers trap anyway. They're trapping moves anyway. Okay, let's look at EU right now, for instance, and let's just talk about it. If you had to look at this wave right now, what direction do you think it's going? What direction does it look? Just looking at this wave right now, on this is the 1 hour chart. What direction does it appear to be going right now? If you were gonna, if you had to place a trade right now, if you had to place a trade, what direction would you place that trade? Who's with me? Who's hanging around for trading night school? Yeah, down is the direction it looks like it's going. Looks like it's kind of rolling over and it's just going to come on down. Now, you have to understand that the market makers will make the chart look like anything they want it to look so many times, okay? And my take on this wave right here is most likely going to head on up. It might come down just a little bit more, and then it's going to head on up. That's my hypothesis for this particular wave. That's the way I'm trading it. Okay. Let me show you what I'm seeing here. First off, here. So when you just kind of take a peek here, we have higher lows right here on the RSI, and we have lower lows on the RSI right there. That is called hidden bullish divergence. Okay, so let's talk about why this move is so tricky and what wave we think it is. I believe it is a fourth wave. Okay, here's one, there's two. Okay, I think all that's this might be three right here at the top of three, and then this is four, and this is five. Why not this three and this four and this five? Okay, why not? Okay, well, it's too easy. Number one, it's too simple. It's too um, it's too. I mean, it looks obvious. And let me just say, if it looks obvious to you, don't trade it because it's not. Generally, obvious moves are tricks. Okay, because in the Forex, the market makers are trading. Listen, they're trading with computers. Their computers are programmed to entice traders so many different ways, and they will give you a look. They will give you a look. Um, and trap you in a trade. Now, why do they want to trap you in a trade? Well, because they create liquidity that way. If they can trap your trade, uh, in other words, that's liquidity they can come back to when they're ready for you. Okay, so or you cut the trade and create immediate liquidity. Uh, Now, so here's what happens here. You got a 1 and then you got a 2, okay? And most traders are looking at this saying, okay, this is probably the top of 3, okay? And then what happens is you got a pretty decent pullback, okay? Pretty this is actually not so. I mean, how many pips is this? This is a 50 pip pullback. So it looks like basically, I mean, um, price was going up, up, up. So anybody that got trapped down here, okay? I mean, because look, just take a peek at what this looks like. As this was being made, as this was rolling over, it came and just past this low. Okay, it came just past this low. Looked like it was going to continue down. Traders got trapped here, and then like a rocket, they just took price. They took it off. I mean, they just took off like crazy. This just happened the other day. Okay, and then what happens? Okay, so price is going up. It's going up. Anybody that got trapped down here, what are they waiting for? They're waiting for this thing to come back down, right? So what happens? This first pullback is a very small pullback, and then boom. What's your psychology like if you're trapped down here? If you're trapped in this trade because you didn't cut it and you had, and you did poorly there. I've been trapped in trades, and in fact, I got trapped in AU similarly. So if you get trapped, what's your psychology like? Um, you're waiting desperately for that price to come back to you, right? And so when there's any kind of movement towards you, you're feeling, that feels good. But then when price starts moving away from you, it's like, oh, it's another hit, it's another blow. And so basically what happens is we got, here's how this one went down. We got let me go to the 30-minute time frame. You can see it a little bit better. There we go. So price went up, a little bit back. Okay, maybe it's coming back. Nope, it continued. Now it came back. Oh, it came back pretty big, big. Nope, it continued. Okay, boom, boom, boom. Okay, just that happened during London right there, and then during the New York session, it came back, and you're like, oh, there's a big pullback, and you're feeling relieved because price is coming back to you, and then nope, it takes off again. Okay, now what happens is basically this move right here is a largish reversal, and it makes traders think this is the end of the move. Okay, this is the end of the move because the reversal is largish. Okay, and it begins to engulf this wave a little bit. And so you get this wave that comes back, and you're thinking reversals, and people are going short down here, and that allows the buyers to continue buying into those shorts that are, and so there are going to be liquidity trapped traders here, trapped traders here. Okay, and so the fourth wave, what it does is it follows a very large wave, a large push up. Okay, and that large push up, if you got trapped in any way, shape, or form, or if you shorted as this thing was going up, okay, that large wave, you're waiting for price to come back to you. Okay, and so once you get that dip, you start to feel okay, good, and you feel good about your trade, and you stay in it, and your trade is, and this entices more shorts there, and then they take price up for that next hit, that's the fifth wave right there. Okay, and so what you've got here is 5 waves of 3. Let me show you how to count this, so you can kind of see it and understand the psychology that happens through this move. Okay. So right here, this push up right there, that's 1, 2. Now this is 1, 2 of the third wave, because we started down here, guys. We started with a leading diagonal right here. 1, 2, 3, 4, 5, right in there, pull back, and then boom, 1, 2, 3, 3, 4, 5. That's the third wave right here. Okay. Now, uh, yeah, let's see, one. That might be. Oh, this is the end of. Yeah, 1, 2, 3, 4, 5. That's probably the end. I'm not sure if this is the end of 3 or this is the end of 3. But nevertheless, 1, 2, 3, 4, and that last hit, okay? That last hit gets you. It because, and I mean, it's like you thought it was coming. What happens to your psychology is that you thought price was coming back to you, and then it goes up and it breaks you down. Okay, it breaks you out um, of the trade. It basically discourages you. And basically you let go of that liquidity up here on this last hit. Okay, because you just waited through this. You got the pullback. You got one more hit. You got a bigger pullback. Okay, it's reversing. No, boom. That's like the last knockdown. Psh, psh, psh. And then you let go of the liquidity, and what happens? Boom. It reverses on you. Okay, that's what that fourth and fifth wave is designed to do. Okay, the fourth wave is generally a fairly large pullback, or it's a largish pullback following the big third wave move. Okay, so let's go to some other waves and let's just look how it worked. Okay, so right here we got this wave right here. Now you see the big third wave move here. This big move right here. So what happened to price? Basically, when you got the straight up candle, okay, you got a largish kind of reversal. 15-minute time frame. See if we can see it. Now, if all you saw was that right there, price coming down that sharply, would you think, hey, this is maybe reversing? That was a fake out to the upside, and this is reversing. Okay, it's possible. It's definitely possible. So when you get that third wave move, that big sharp third wave move, you get that a sharp return, a fairly steep fourth wave, and what's that do? That traps traders again. That's a trader trap. It traps shorts. Then they go up and hit that liquidity. Boom. They go up here and hit your stop up here. Get that liquidity, and then they take it down. And you're going to find that little pattern all the time. Okay, so let me encourage you, when you're watching a trend and you're waiting, trying to find the end of a trend, okay, this is what I'm teaching you. It's not going to be the first pullback. The first pullback is not going to be the end of a trend. Doesn't mean you can't trade it. It just means it's not going to be the end of a trend. um, it's a fake out, so expect it. So basically, what you're looking for is a large three wave, that moves heavily, and then you're looking for the next you know, moderate pullback that looks to be like a reversal. Okay, you can trade that if you want, but the best thing to do, wait for it to come down and then reverse, and you can trade that fifth wave to the upside and get that last liquidity because that's a really fast wave usually, and then you can just reverse the trade, boom, and they take it down so fast. Okay, that's a good wave to catch. Okay, and that's just a common thing. Let's look at it on the downside right here. Same thing. Okay, right here at this wave coming down, just right here. Okay, so price comes down, comes down. Got a wave. This is kind of a corrective wave, but it's coming down choppy. But we're getting kind of to the end of it, and then you get this steep move to the upside. It's engulfing too. Look at it. This is an engulfing move right here. And then what do? They bring it down, okay, for that last hit. Trapping traders up here, bring it down for one more hit, and then they take it the way you thought it was going to go. And so that's the psychology of the fourth and fifth wave. That's what they'll do to you every time. Okay? All right, let's look at some more fourth and fifth waves, maybe on a different pair. Um, let's look at Aussie dollar. Let's go to the 4 hour time frame. Just kind of look large. Let me clear my chart here. Okay, so look at Aussie right now. What are we waiting for? We're waiting for a pullback, aren't we? I mean, this thing has been going, 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 and it's starting to kind of flatten out. Okay, so you think it's going to pull back? Yeah, yeah. It looks like it's ready to fall off the cliff, doesn't it? Looks like it's just ready to kind of come back. Now it could do that. It could. But most likely, you know what market makers are going to do? They've been coming up to this liquidity zone over here. They've been moving the price up to liquidity zone, okay? Supply zone, demand zone, whatever. Um, they're going to come up and hit it. You know they are. You know they're going to come up and hit it. Now, what they'll probably do, what they'll probably do is give you a sharp move to the downside that seems fairly big. Okay. Now this is the 4 hour chart, so that might take a day or so, and then they'll bring it up fast, that last hit, and then they'll bring it down where you thought it was going to go. That's a possibility. Okay. In other words, they basically they trap traders here, go up for the liquidity, snag it, and then they take it down. So they screw the traders up here, screw the traders up here, and they just whipsaw you. Boom, and that's the whipsaw motion of the market. And by the way, that is the motion of the market. You have to understand that motion. We call it a whipsaw. Price goes sideways, it goes down, goes up, and comes back, goes sideways, up, down, and back. And that's the way the market moves. Okay, and you can just see it over and over and over again on every time frame. Okay, let's go back here. I mean, just look at this right here. Look at this wave right here. Now, this is the 3 day chart. So this is over a long period of time. But look, you got one, two, three. Big reversal. See, it didn't break this high, and it looks like it's going down. So someone would have thought this, right? So big kind of move here, and then they go up and hit you again, and then they bring it down. That's what they do. That's what they do. That's what the fourth wave does. That's a 4, 5, and then they bring it down the way you thought it was going to go. Okay. Does the 5 wave psychology primary apply to just currencies, or no? It's every market, Josh. Every market. You can find it in crypto all over the place. So yeah, it works in any trade. Everything I'm teaching on the Forex generally works on any market as well. But the Forex is a little different in that it deals with time, like trading times when you're dealing with bank hours and London session and Asian session and New York sessions, understanding news events. But basically, the trading the forex is, it's more time sensitive, and you can know when the moves are going to happen. But yeah, this happens on all of them. Okay, let's see. That's not a great chart. Let's go to let's try UJ here and see what we can see. UJ is notorious for doing stuff like this to you. Okay. All right. Let's look at this wave to the upside right here. All right. As it was going up, you got one, two, three. This comes down sharply. Expected it to reverse. Nope. It goes up again. Expecting it to come down now. Nope. Gives you that other hit. And that's what they do. That's what they do to you. They'll extend it. And then they'll end up bringing it back down where you thought it was going to come. That's why I tell you, relax. The market always comes back. They're going to come back to your price. They are. They're going to do it. They're going to come back to your price. Let me check Euro here in just a second here, guys. I guess another thing to mention is that the market makers play around, really play at key levels, right? Look at this level. Look at this level. A lot of playing around there, right? A lot of liquidity. Goes up, comes down, came and touched, bounced up, came back down to it. Now what's it going to do? Is it going to bounce again? Is it going to go through it? And so they're going to do a lot of playing around here. Okay, they're gonna make I'm short in this one right now, guys, and I'm expecting a move to the downside. Maybe I don't know. I'm a little concerned. It looks like a three wave, and a three wave. So this might be a WXY. That might be my bias instead of down. It's up, but right now I'm in profit, so I'm not worried about it. I can cut this out, but they do a lot of playing around here. Okay, so they go up, they came down and then wicked it back up right here. Just on the small time frame. Okay. Um, but check this wave out right here. All right. All right. Let's just look at this wave right here. This wave. Okay. So at uh, at midnight starts going up, climbing. What do? They bring it down, three wave move like that. Okay. But anyway, so now it goes up sharply. Then we get our third wave move, and then what do? What did they give us? They give us a wick. They give us a wick right up here, and a move down. That's a lot of red candles showing down, and then so traders are going short right here because they think it's reversed, right? And then boom, they go up for one more hit. Okay, trap the traders, screw everybody up here, grab all the liquidity in both places, and then they bring it down fast, really fast. Okay, and that's the kind of crap that they do over and over and over again. Okay, so what's the lesson here? How do we trade this? No, I don't trade the GBP pairs. Um, Sorry about that, but I can certainly chart it for you if you want. Um, it's just too much. Too much. The GBP costs me too much in margin, so I don't trade it. Okay. Now, um, let's see here. Maybe I already showed you this, but you kind of see it right here. It came down steep. Thought it. Okay, we're gonna get a three-way pullback. Nope. We go up, tag the high, take the liquidity out, take it down fast. That's the way they do you. That's the way they do you. Okay. They came down here, they broke the low barely, and now they're reversing it. If it breaks this wave right here, if price comes up and breaks that wave, I'm out of the trade. But if it stops right here and continues down, okay, I'm in the trade. But if it breaks that wave, I'm out of the trade. So I'll be watching that carefully. Okay, guys, so that's what they do basically. So here's the Elliott wave. Basically, here's what we learned tonight. 1, 2. Once you get that big push of the third, okay, and then you get kind of a big pullback. That's not the pullback. Watch out for another hit to the high, and then they're going to take it down fast. So watch out for that hit to the high, and then they take it down. Okay, that's what you're looking for. Now, how can you identify that on a chart? Well, wait for that big move, okay? Wait for that big move and then a moderate pullback. But secondly, divergence. When you get divergence between the fourth and the fifth wave, okay? Let's look here and see where the divergence was. Okay, you can actually see we had divergence here. That's a fourth and a fifth right here of a smaller degree. So that's a 4 or 5 of the third, most likely. Okay, and then we got 1, 2, 3, 4, 5. Okay, then we had divergence here as well between the fourth and the fifth of the final wave, and we had divergence here between the fourth and the fifth of the larger scale. So anyway, yep, divergence. We have divergence. Now, expecting this thing to probably come up and come down, okay, and then continue on maybe. Okay, so come up, come down, and then continue on. That's a potential play. Let me show you guys what the candle is doing now. See, they're playing around this level right here. They're playing around this level. So they had a candle go up. They had a candle come down, wick up, and then come down. They're probably going to come back up still, but they're just playing right around this level. And that's what they do, y'all. That's what they do. Okay, guys, that's just kind of a simple lesson. Simple lesson here. Just some takeaways. One, two. When you get the big move up, that one day it's just going to move like 100 pips or 200 pips. That's the third wave. It's probably going to consolidate for a fourth, do a fifth, come down deep, and then come up one more time and then bring it down. Okay, so you got to just watch out for those fourth waves. Okay, watch for the divergence and trade it. Okay. All right, guys, I'm pretty exhausted, but that's just a quick lesson, Elliott wave lesson, psychology lesson, for between the fourth and the fifth waves. Now, if you're interested, I can teach and show my RSI strategy. If anybody's interested, I've got an RSI moving average strategy that I can share with you. That is a pretty good little trading strategy I created using divergence and a moving average. Anybody interested? Got one person. If I have 5 people interested, I will do it. I will share it. I've shared it before. I've made videos on it before, but I'll share it here again. Okay, there's 3. 2 more people got to want it. All right, I'll do it for you 3. Okay, here's what you got to do. You need to put your moving averages on your chart, but actually, you need to have just one moving average on your chart, and it's the 10. Okay. So it's going to be the 10 period moving average. So here's how you do it. You just basically click on indicators right here. Let's get moving average. Simple. Let's see. Let's do. Let me make that one of my favorites. There it is. Okay. So I got moving average on my chart here. We're going to set it to 10. Okay, set it to 10. Let me change the color here so we can see it. I'm going to make it really kind of darkish here. There we go. All right, now we can see that moving average pretty well. All right, now on the bottom, on the RSI, set your RSI to 10, okay? And then what we want to do is add the moving average to our RSI, okay? So the way you do that is that you point here, you simply point, I'm going to expand this a little bit. Point to the RSI right here, and then you'll see the wheel there. And you see the three dots there. It says more. Click more, and you can add an indicator on the RSI. Okay, so I want to add an indicator on the RSI, so I'm going to do that. I'm going to add an indicator to the RSI, and I want to add a moving average to the RSI. Boom, done. So now I have a moving average line on the RSI. I need to set it. I need to set these settings now. So I'm going to change the moving average to 10. Okay. And I want the style. I like orange. Orange is fine. Let's just make it darker so we can see that moving average line. Okay. So now there it goes. We have the RSI and the moving average, which smooths out the RSI a bit. So here are the rules for the trade. Here are the rules for the trade. Um, da, da, da. Tell you what. All right, I'm just looking at that thing. Okay, here are the rules for the trade. First off, we need to be on the hourly chart. That's number one, hourly chart. All right, number two. Um, this trade becomes triggered. Okay, this trade becomes triggered when you get to the overbought, overbought or oversold on the 1 hour chart. Okay, on the RSI, overbought or oversold. Okay, and you have divergence, and you have to have divergence. Okay, so right here we have divergence. It's overbought with divergence. That is good. So here's how you trade it. Once you see the divergence, uh, and it's overbought, okay, what you're going to do is you're going to wait. You're going to wait for the RSI line. Once the divergence is made, you're going to wait for the RSI line to cross the moving average. So we're looking for the RSI line to cross the moving average. It's a moving average cross. The RSI is moving across the moving average. So let me make this a little bit bigger so you can see it. So right here we have divergence, and here's our signal right here. Moving average has crossed the line. Second thing you're looking for is you want to see it retest that line without breaking by it, without breaking it. Okay? If it breaks it, like it did here, wait for it to cross again. Once it crosses, there's a new signal. Now, so your signal happens when the RSI line crosses the moving average in the RSI. Second piece of this puzzle. The second piece of the puzzle. The secondary signal. You have to have, along with that, you have to have price has to cross the moving average as well in the same direction. Okay? So let me show you how the signal works. All right. It's a complex, but it works. Okay, and it gives you great signals. RSI crosses and retested, but it crossed back. So our signal is right here on this candle, right here on this red candle right there. That's our signal. I'm going to draw a straight line right there. That's when we got the signal on that red candle. Once you get that signal, you can, if you want to enter there, that's an aggressive. Once you get the cross, and you can enter the trade. That's an aggressive entry. A a less aggressive entry is you wait for price. You wait for price to cross up here the moving average. Okay? Now, on this particular trade, once price crossed the moving average, and once price crossed the once the RSI crossed the moving average, and then once price crossed the moving average in the chart, you had a signal to go short here. Okay? And the signal to go short was right here on this candle. We would have gotten in right there. Right here would have been our entry. Somewhere like right there. So, how many pips would we have gotten on this one? Well, this thing oscillated down. It gave us 16 pips in the beginning. It came back up. Now, what's the stop for this? What's the stop? When price crosses the moving average again, okay, that stops. That stops you out. Now you can let it close on the hourly if you want, or you can just once it crosses you can stop it out. Just depends on your risk tolerance here. You would have on this particular trade you would have only gotten some because this was the fourth wave. Okay, so the idea behind this is that we're trying to catch the fifth wave and we're trying to nail the top almost. Okay, so let me show you again how this would have worked another way. Let me show you all the signals again. First off, we got to have overbought conditions. Secondly, we got to have divergence. Okay, so we need to see divergence. Well, we got the divergence. We got the divergence right here. So this is another signal that EU has given us. We got divergence. Now, what happened? Well, price crossed the RSI line, okay, and then generally once it crosses the RSI and it crosses price, you can enter the trade. This would have had you enter the trade today. You would have caught on this candle 20 or 30 pips. Now, this might continue on down. This could continue on down. It could. It's threatening to, or it could go up again because we do have this divergence. You can use this on the 4-hour chart if you want. You get less signals, but the signals that you get are better on the 4-hour chart. Okay, let's do like the signal down here, for instance. It's a really good signal right here. Okay, price came down, we got oversold. Okay. Once we got the divergence right here on the bottom, we got divergence, okay? Look what happens. Price crosses. Here, I'm going to make the RSI bigger here just for a second. Right here's where we're looking. So look how price works. The RSI crosses and retests. That's what you're looking for. Once you see a bounce off of that on the 4-hour chart, okay? So what does that correspond to? Well, right here, price came up, and when this retested, it created the bottom. You actually nail the bottom with this signal. Now, if you want to be what's the word? Conservative. Wait for price to cross the moving average up here, and now you're in the trade. Okay, now you're in the trade. So that's a kind of a complicated strategy, but it works using divergence and the moving average. The moving average, what it does is it helps you to nail the tops and the bottoms, but you really need to see the divergence, and it needs to be oversold and overbought. Okay, I mean here's a good signal right here on the 4-hour chart. Right here, you got divergence. Okay, we got divergence now. You got the moving average cross and the retest right here. You got a cross and retest. Boom, your entry. This gave you that gave you 200 pips. See, the higher the time frame you trade this on, the more pips. But you got to be willing to hold this stuff. You got to be willing to hold it. Okay. Uh, as long as price stays underneath of that moving average, you're golden. Okay, and so the exit strategy isn't so clear on this yet. I'm still working that out. But basically, you could basically once you get to you hold the trade until you get to the oversold region, and call it good. So once price comes down and hits the oversold, then take your profit and wait for the next trade. So that allows you to get into the market and stay in for a while. But you're going to have to wait through the ups and downs, and that's the 4-hour chart. That would have given you 200 pips. How long would it have taken you to get that 200 pips? Right there's where. Let's see. That would have been 4 days, 284 pips in 4 days. But you only have one trade. One trade, 284 pips. Um, it's not always perfect, but here we're oversold. We don't have divergence. Well, we do technically have divergence here. Um, we got I'm just looking at other signals here. We got divergence here. So that's the first thing you're looking for. Oversold's first thing you're looking for. Second thing, divergence. Third thing, you're looking for price to cross the moving average. Once RSI crosses the moving average, okay, that gives you a heads up that the trade is coming. Once price crosses the moving average, that's the secondary if you want to conserve. So you could enter once price crosses the moving average, you could try to enter and see how it goes with a close stop. Or you wait for price to cross. This would have given you 65 pips. Okay. Um, you could get out of the trade when price crosses back across there. That's maybe a strategy. Or if you just wait till this gets overbought, if you just hold it through all this crap, okay, until it gets overbought, this would have given you 190 pips, guys. And it would have taken 13 days to get that though. Okay, so not that one's not so great, right? So again, these strategies are they work and they don't work. You do the best you can, and you gotta have good risk management in the process, and make sure your entries are spot on. Okay. All right, guys. Don't forget to enter and exit around trading. Around sessions as well. So mark your sessions. Like this move right here, for instance. This was midnight. You know, yeah, this happened. Around midnight, 1 o'clock, 2 o'clock. In that ballpark there. So that's London session. So, all right, guys, what do you think? Just play around with that. It's a technical strategy, but it helps you to nail tops and bottoms, and you can always win trades. So try it on different time frames. Try the 2-hour chart. See what time frames you like for this strategy, and play with it and see what you do. It's something I created, and I share it with you. So, all right, guys, pretty exhausted. I need to skedaddle. You guys have a fantastic night. Thanks for stopping by. I hope that was a helpful time for y'all. Okay, and just keep trading well. We nailed the trades today, didn't we, guys? We had a good trading day today in the Telegram group. So glad you guys who are part of the Telegram group, you're with me. If you're not, you should come join. Come join us. That'd be great to have you. All right, that's it. Gonna call it a day, okay? Thank you guys for everything, and let me know if I can help you in any way.